Well, Growers Edge, I think, has made us more money by allowing me to survey the local bids that I'm in the area that I want to sell my grain. The local elevators and the ethanol plants know that this information is out there, so they've got to be competitive if they want to get the grain. You know, we've been able to maximize our return on our farm.
Good afternoon, welcome to GrainTV. It's July 9th, 2014. I'm Logan Burgess. To my right here is Cody Bills to help break down another negative day for the grains in Chicago. As you can see, we had old crop corn off 7 cents, new crop down 6 1/4. August beans showed a little bit of relative strength in the grains, off just 2 cents. November continued lower, down 12 1/2. Chicago wheat was down 4 here. Cody, we really saw liquidation across commodities today, agricultural commodities, energies as well. Kind of break down the action that we're seeing right now in August. It's come a long ways. Are we close to finding a bottom right now?
Well, first of all, we've been seeing a huge amount of bull spread liquidation here in the soybean complex.
Right.
And I would suspect here, I mean, we still do have very tight stock, so I would suspect that the trade action that we saw here in the August contract, really the old crop contract for soybeans, is positive. It seems like we traded down to that 12.31, then we bounced back. You know, we might be able to find some support around here for that old crop contract. We've come a long ways, but the thing that makes me a little bit nervous for this old crop soybean contract, and the reason I don't necessarily think, the reason I'm not necessarily thinking that this is a very bullish opportunity for a rebound, like a very sharp snapback, is simply because when you look at the soy oil prices here, you'll notice that we just broke through some key support levels there. And I think that that's going to weigh on old crop soybeans. I think that's going to weigh on the soybean complex. So I guess what I'm looking at is we may see some pausing, we may see a little bit of a rebound here, but I'm not overly bullish of a major snapback on this move.
Well, it's obviously the old crop soybean market is going to be watching the 2013-14 ending stock numbers that we're getting on Friday from the USDA. Take a look here at this table here real quick. What we're comparing is what the USDA projected in June for those ending stocks compared to the average analyst guess for Friday's report. You can see here the larger than expected June 1st quarterly stocks of corn will be carrying over into those ending stocks. Average analyst looking for 1.232 billion bushels there reported for old crop corn. Soybeans expected just 3 million bushels higher there. And we did have the marketing year ending for wheat on June 1st, so no changes. Really though, this report is going to be primarily focused on the new crop. As we know, in the June 30th planted acreage report, we saw an absolutely massive soybean number. Quickly to review here what the trade's expecting. The average analyst is looking for 418 million bushels in 2014-15 ending stocks. Really not a lot of changes expected for corn there, adding just about 50 million bushels. Cody, the big question now is how is demand going to respond to lower prices? How is demand going to respond to higher production? And I know you looked at that a little bit here today. You have some important insights to share here, kind of looking from a demand perspective here moving through the marketing year.
Absolutely. Well, first of all, I think the big thing here to take away is that we have a huge amount of acreage coming online. Of course, everybody knows that. And we know, we also have a very good crop conditions report out there. So if you hold all things equal, we're about 3.6 million acres over last year. When you look at total supplies, what that means to total supplies, assuming we're using the same yield that they use in the June WASDE report, we're looking at about 169 million bushels over in terms of additional supply over what we saw in June, and year over year that's a 425 million bushel increase. So huge increase to supply. Now the question is how elastic is demand? How will demand respond? Well, when you look at kind of an analog year, 2006, 2007, we had a 10% increase in supply, and when you look at the crushings and the export sales, we really didn't have significant response there in the crush sector. I would expect to see the crush sector not have huge revisions here in the WASDE report, but I would expect to see a significant amount of increase in export sales. I know that when we look at that 2006-2007 kind of analog year for a situation where you have large ending stocks, we saw 72% when you combine the crushings and the export sales, 72% of the gains in that demand was out of export sales.
Right.
And so that's where I would expect to see the majority of these export sales here, most likely in this coming WASDE report. I think most of the revisions are going to come from export sales.
Now, if we consider this here, Cody, obviously we have a very large production coming online, but this soybean market has continued to march lower following the June 30th report. We really haven't seen any strong indications yet that international buyers are ready to price some new crop U.S. beans. We did see some sales this morning for corn, but really not any reportable sales to speak of here for soybeans. For a producer right now that's looking at this market that's already sold off substantially, are you still under the impression that there's downside risk here as we approach the Friday report and beyond into harvest?
Absolutely. When you look at ending stocks for that 2006-2007 year, we were trading around that $7 price range. That is a scary number when you look at this chart. I mean, this is a chart from 1975 to the present. And I think one of the big takeaways from this GrainTV is that you need to zoom out. Everyone in the last 3-4 years has been used to seeing, $11, $12, $13, $14 soybeans. Well, with this kind of an ending stock,
right,
this is very concerning because you have, you have significant downside. We could be moving down toward that $9 price level when we saw back in 2009, 2010.
Yep.
I think that's concerning. We could go even lower here if we continue to see improvements in the overall crop.
Right.
The bottom line here is that yes, we have been selling off since this Monday, June 30th report, but I think we still have a long ways down to that we could potentially go.
Yeah, absolutely. Well, we'll get one indication there of export sales on the new crop tomorrow in the export sales report. That'll be out at 7:30 Central Time. Analysts are expecting 300 to 500,000 metric tons reported sold for new crop soybeans. As I said, so far marketing year to date, we haven't seen exceptional forward sales for beans. We'll have to see if that changes in tomorrow's report. We'll be tweeting about it as it comes out. At GrainTV is where you can find us over there. Thanks a lot for joining us here on GrainTV for a Wednesday. We'll see you tomorrow.